How's it going, guys? How's it going, guys? I gotta mute that. All right. Welcome to part 3. What I believe is part 3, at least that's the title of the video. We are now going to talk about entries. So on our last 2 intro to day trading videos, we talked about some lingo, me and CT were going back and forth about different things we thought you should know. Well, this is the kind of 3rd video in the series when it comes to kind of that. So now we're going to go from the lingo to what I'm doing and what I am looking for to enter a trade every single day. And we're going to get to that really quickly. But first, I want to just let you know that this is something that you cannot do in a vacuum, that this is something that we have to take into account more than just the strategies I'm going to tell you here. So we're going to get into that a little bit. I'm going to talk a little bit about what I mean. And if you don't know and you're just jumping in on this video, the Intro to Trading series, I'm trying to do 15 to 30 minute videos that come together that I can kind of, so that if I wanted to show it to somebody, you're not looking at an hour and a half, a 2 hour, a 3 hour, course or masterclass. You're just looking at a really quick 15, 30 minute thing you can watch in one sitting, and you can jump to the next, and you can jump to the next, and you can jump to the next video. So this one is going to be on the entry points for my trades. So with that out of the way, I'm Gator, and welcome to the swamp. All right, so first things first, nifty opening out of the way. Let's jump right into this. Not going to waste any time today. Hope you guys are doing well. Thanks for hanging out. There's a big delay in between these 2 videos. The last one I did and this one, I talked about why that was. But here we go, without further ado. Day trading strategies. These are strategies, or I should say entries. It's not the entire strategy. Remember, we're breaking this down into several things, but this is the main entry keys, the buy points that we are looking for, the patterns that we are looking for, used by Gator and everybody else in the Discord and the Market Bandits. 2. Little bit of a what is this thing here? Gotta delete stuff. So a little bit of disclaimer. While these are strategies I use every day, they should never be done in a vacuum. We'll talk about that. All trade ideas are just a way to view and act on price action in a market and can fail. You must practice proper risk management on all trades, and you're responsible for understanding the risk and trading responsibility. So it's on you. It's on it's on you to practice risk management. Don't come in tomorrow after I show you 1 or 2 of these things and be like, I took this like the first thing and it didn't work. Everything is within context. So nothing is just, oh, hey, this sets up, it works 100% of the time. Once a strategy has failed, you move on to the next time frame or next strategy that hits. A strategy is only good the first time it comes in a move, and it only becomes active again if a price action accelerates with a lot of volume through levels. That's just a basic rule that you need to follow with these, and I have found this keeps me out of trouble as far as like jumping into trades too much, over trading. When I am trading a move, I'm looking for the first time this triggers. I'm not looking for the second, for the third. I'm looking for the first time, unless we're just running wild. And we'll show some live examples of these trades. We'll show what they look like. When I haven't put any in here, I haven't taken any snapshots of who knows when in the past. We're just going to look through Friday and today, and we'll find some of these moves. And I think these are most valuable, in my opinion, because one of the hard things about becoming a trader when you're first a trader is you just don't know what to do. You don't know when to buy. You're like, well, the market's going up, the market's going down. What can I look for to give me a signal to buy? So what we're about to go into, these strategies are very simple, easy to see, easy to understand. And they can be easily utilized, but you need to, and I'm just going to keep drilling this home, understand the overall context of a move. and you need to see something happening. So this is after a breakout happens. When we have momentum in a direction, this is what we're doing. What up, Con? What up, Rebecca? Welcome. This is once momentum has taken place. Once we have a direction and a name, once we have an actual breakdown that has occurred, like let's say this move right here, or what happened last Friday, like this here, how do I know when to get in? What am I looking for as a buy point? As a trader, when am I looking to get in? So that's what we're going to go over. And let's go to the first strategy that we can try. This one is the most aggressive, and it is also the one that I would not generally recommend. But if you're just like, hey, I got to jump in something, this is the easiest and simplest one. It's just called the one and done. And these strategies are not specific to me. I didn't invent them. I actually originally learned them from Mark Melnick, and you'll see some of the names on here, name stuff. And the T3 trading room that I trade in is where we learn these. So it's just a way of looking at price action. And so a one and done, clearly stated on this chart, let's say, and I'm just using, let's say, kind of a random bar. So I'm going to jump back over to here. So let's say that you have something like this. A one and done would be like, I see a big explosion in a bar and I buy the next bar. So as soon as this bar closes and I see the ticker on my level 2 ticking up, I buy this breakout. And then you sell it, you know, you sell per the trade. You sell as it accelerates up. This is just, hey, something triggered. Now, generally speaking, the trade I just showed you, that one bar is not, would not be a strategy per se. But if you're just like, hey, I'm jumping in, that's the one and done, as it were. That's like, hey, I just saw a big bar and I'm buying the break of it. You could, let's see. And this one is the one that I would say is kind of, I'm not going to say least effective, but it is the most aggressive and probably least general effective one, because you can see something like this. And here's what I mean, the only one works. This is a 2-minute chart, sorry. So let's go over to a 1-minute chart. So we're at a 1-minute chart. Here it is. You can see this. So I was on a 2-minute. I'm now at a 1-minute. The one and done takes place on a 1-minute. A two and done would take place on a 2-minute. So the first one signals the time frame. So a 1-minute and done. So you have a big bar and you're just buying the 1-minute breakout of that, and you sell as you become profitable. Don't hold it. This isn't an all-day runner. This is just an entry on maybe a reversal or something like that. You're taking the explosion in volume. You can do this in options. You can do this in common. And that's what you're looking for. And if we go back, usually these kind of would happen at the start of days. Microsoft, not the best name to do it on. You could do a name like Tesla. One and done can be the first bar of the day. Again, this is not one that I do a lot, but you could see the first bar of the day right here. You could say, all right, we have a green bar, 1 minute. I'm going to buy the top of this candle, 1-minute breakout, and I'm just going to take a quick 20, 30, 40 cents, and I'm going to sell. So I'm going to mark it in. As soon as this bar closes, you can see it tick down a little bit. As soon as it starts ticking up, I'm going to take a long, and I'm in. That's the one and done. Simplest, easiest thing to understand, right? You're a new trader. You're just getting into it. Bam. One minute breakout on a big green candle. It also works on red candles. You see a red candle, let's say, again, just using Tesla chart today. This is not, you know, you have an accelerating bar down. You don't want to wait for it to pull back into a moving average. You just see an acceleration. You wait for the next one to break it and you take it. It's that simple. Again, doesn't always work. It is the most aggressive and the most dangerous of the strategies. But if you're an aggressive player and you see something like, I mean, Tesla here, it gapped up, one big green bar, you just buy the next top of it and it goes. That's your first entry. That's your first trade. Simplest one and done. Vilma, good evening. Sorry for the question. I'm new to trading. Do you use stop trailing? Yes, so I can. That will be a different video, and I'll do a show tomorrow. If you want to come back on tomorrow, ask in Discord, and I can answer that. The point of just tonight's show is a really quick rundown of some strategies. I'm not going to cover in-depth stop losses in this. I will briefly mention them, but risk management is going to be a future show, I think, next week, and targeting or targets for your take profit is also going to be a future show. For the sake of this one, it's just the entries. It's just, what am I looking for? Okay, this is the buy. This is the possibility of taking this trade. And then the risk management stuff will probably be video 3 or 4. But it's a good question. So mark the one and done. Let's go back to the PowerPoint. So there are your basic rules. You need a name that's breaking out or down from a pattern, a failure to break out, something like that. You see a candle that's a big candle in one direction. As soon as that candle closes, you buy the break of that candle, or as soon as your ticker starts moving in the direction of that candle. Put a stop at the bottom of that big candle. Or wherever you want based on your risk reward. Generally speaking, if I'm going to do something like that, my stop would be about 75% of that big candle. This is something we're going to talk about in the past. If you want to use a trailing stop, you could use a trailing stop. That part's kind of up to you. Take profit as the price accelerates up. If you're trading options early in the day, you're going to get a lot of initial volatility in your options. As something explodes, take the profit. Or if you're scalping common, much easier to scalp common if you have the account size to do it. Take your profit as you go up. Or if you have a larger time frame that tells you to stay in the trade, stay in the trade and take your strategy. The M1 or Mark 1, you'll hear us refer to this in Discord a lot. You'll hear us talk about this sometimes in the T3 room if you're in there. Let me delete this. That is, you'll see it right here. This is a 1 minute chart. So let's say Tesla gap, here we go. Let me go back to my other charts. Sorry, guys. All right, this happens right here today. Happens a couple of times. So let's say that you like Tesla long. What are the rules? So you like Tesla long, you want to trade it. It gapped down, you think it's going to go up, but you don't like the one and done. You're not really sure when you want to take it. When can I buy it? When do you want to buy it? Well, according to this strategy, choose a name that's triggered a breakout or breakdown. Wait for a candle to close lower or inside a previous candle on a 1 minute time frame. Buy the next break of a 1 minute candle in the direction of the move. Take profit at first target. Generally, that would be the high a day or whatever your target would be. Put a stop at the bottom of the entry candle or based on your risk reward for what your trading plan tells you to do. Creating trading plans is something else that I'm going to do. We're going to do some videos on in the future. This is also called, if you were to just look this up online and stuff, you'll see like inside bar breakout. The strategies you'll hear us say M1, Mark 1, Mark 2, Mark 5, they're all really inside bar breakouts. And on larger time frames, that means different things. So let's say Tesla did this. You had an inside bar close here. This opened up here. It actually came in. I remember because I was watching this. You tagged VWAP and you accelerated through the top. As this starts ticking back up, you can buy at any point in this candle, but the trigger for the trade is actually through the top of this candle. Now, if you're like, hey, it's down here, I see this forming and it's going up, that's something called a front run. It'll be something that we kind of cover. I'll mention it here. If you're assuming that something could happen and you see this and then you see this 1 minute candle go down and then bids start coming in, it starts ticking up, you can buy at any point. That's on you to determine your risk management, but the trade hasn't triggered until it actually takes out that candle high. You take out that candle high and you tick up another 2 candles. That's 267, so that's a 1 point move in Tesla. On your options now, that's 40 cents, 50 cents. So depending on when you bought here, if you were looking for this strategy here and you said, hey, Tesla gap down, I think we're going to make a little bit of a retracement. If you know anything about Fibonacci levels, something else we'll cover. And I have another video in this series I did with Kelly. If you go to this playlist that this video is under, watch that one. We'll talk about this. But if you say, hey, I think Tesla's going to bounce to this 38% retracement, I'm looking for an entry. I don't want to do a one and done. I'm going to wait for an inside 1 minute candle, and then I'm going to take the break of that candle. And you have a target that was placed. So when you're talking about making a target, that is one way. Again, we'll cover targets in another video. But you're looking for your first inside candle, and then you're looking to buy the break of the next candle. So if this candle closed down here like this, let's say, let's go elsewhere. Let's go to Friday. Let's see, what names were moving? Let's go, we can go here. And I think this will actually be a few things. So here's one that works, but then is very choppy and doesn't work as great. But here's one right here, same thing. Here's your inside, and then there's your breakout. Again, 1 minute time frames are your least effective, but that would be your buy point of what I'd be looking for. Now, if you just took this, this is going to come down. You could, if you don't have the right risk, if you put your stop down here, you could get stopped out. If you took profits there. So again, this doesn't always just work, but this is something I'm looking at. This is something I'm looking for. If I'm saying, hey, I'm taking an M1, then that's what I'm taking. I generally do not trade on the 1 minute time frame, but just looking at Tesla, that's what happened there. Looking at Meta, same thing here. This is a 1 minute time frame. So if you miss this, let's say you miss this Meta move here and you're not sure when you want to do it. And I'm going to come back to this, and you're looking for the first, so we're going to wait. We're going to come back to this one because this one is actually a different strategy because of this. But even this one has it. This is a little bit extended, but you kind of have the same thing here. It comes up, it's going flat, it breaks out, it comes back down, but it's actually coming into this. So we're gonna talk about this a little bit. We're gonna come back to this one. So the 1 minute, I don't play a lot, but it is a strategy I'm looking for. It is something I look at. If there is a name that is moving aggressively, I'm looking for that 1 minute candle to just take a rest. The price accelerates. I'm looking for that 1 minute candle to stop. Again, generally speaking, I'm trading on a 2 minute time frame, and I'm looking at something like this on a 2 minute time frame. So let's jump over to the next strategy. Again, just trying to move on the M2 and the M5. So these are all the same. So I'm going to cover 1, 2, and 5 all in the same gate because it's all the exact same thing. It's just on a different time frame. Mark 1, Mark 2, Mark 5 are all inside breakouts on different time frames. A 1 minute, a 2 minute, and a 5 minute. I mostly trade the 2 and 5 minute. I do watch the 1 minute, but I am not always looking for that unless I'm trying to be very aggressive and very quick. So for instance, let's go to Microsoft today. This is a 2 minute chart. My trading plan today was to wait for Microsoft and a few other names, but this was one of them, to test yesterday's close. Once we tested yesterday's close, I wanted it to break the 21. This was just my plan, and then wait for an inside breakdown. And I would call this a red takes green, a red candle taking out a green candle. You could even say a Mark II, because we have, at least for what I think, you have a failure to explode. You're below the 21 EMA. The reason I took this trade, we'll talk about later or in a different video. But the idea is this is a 2 minute time frame. I think we're going lower here. I have a reason for thinking this is going lower. I've got a setup, all that, all that being said, as soon as it happens, I take it short on the break of this inside 2 minute bar. So we've got all this that's happening. I'm watching the name. I see that we've tested, which is level I was waiting for. We failed to break through. We come back down. We're below a moving average. I wait for us to take out an inside 2 minute bar, and I take a short with a stop. For me on this trade, my stop was, I had a 2-day high basically stop. Like I was like, okay, I think if I take it here, it can go, up to about here. So I had about a 87.20. I had about a point risk in this, and I thought we were going to test day lows. So about a 2 point, to the downside at least. And then we obviously went a little bit lower than that. So what I'm looking for to take a trade after I have an idea is a 1 minute, maybe if it's super aggressive, a 2 minute, something like this, which is the main thing I'm looking for, or a 5 minute inside bar, and then breakdown after whatever condition it took for me to get to that trade to happen, like a flag, a bull flag breaking down, a wedge, a rising wedge, a ascending triangle, whatever pattern you want to put there. What I am looking for after that pattern has triggered is one of these things to happen, and that being this inside 2 minute bar breakdown, a little bit of consolidation up, and then a 2 minute sell setup. The sell setup takes place, and here's your next sell setup here. So you're coming down, another one right below another moving average. So we've obviously got a measured, we've obviously got a down move here. You get a few candles digesting up, and then you take your sell setup on that 2 minute breakdown. and then we come back up and there's another strategy in here. But remember, it's only the first time it triggers. So here's your first one, and then, you know, it does work the second time, but generally speaking, I'm looking for the first time it triggered, which is, you know, which is that's your quote unquote M2, or your red takes green. You're looking for a red candle to take out a green inside candle. Same thing on the 5 minute. If we look at Microsoft, you might have actually had another setup here. So we actually have two setups here, and this is going to be in Microsoft. This is going to be a good segue into our next strategy. So we're going to use this. So on the 5 minute time frame, if you're like, you know what, I like to look at the 5 minute and the 2 minute, when would be a good time using the 5 minute to short Microsoft today? Let's say you didn't do any of this. Let's say your plan was to let a lot of the names run into the top. Once they confirmed a down move, like, well, I don't know when to chase it. Microsoft's just going down. Gator said he liked it. Other people do. When can I get it? Well, when is a 5 minute short? Here's your, I mean, I wouldn't take this one for some certain reasons, but when could you take a short? You could take it here, or you could wait until this strategy hits. If we're really extended and we're really coming down, especially if you have a candle like this, a hammer, into a level, what do you want to wait for? Do you want to just necessarily short the first 5 minutes after we have a massive red move? No, not necessarily. What would be better is waiting for this strategy. Know your limit 8. How much time do I have on this? A few minutes left. Know your limit 8 is waiting for the exponential 8 moving average to test on the 1, 2, and 5 minute time frames. Might work on other ones. You can back test it all you want to, but what I'm looking for is the 1, 2, and 5 minute time frame to hit. And you can see that that actually happened on Tesla, and then pretty much the same thing. You wait for a setup to digest, touch the 8, buy the next relevant candle time frame that breaks after it. Yeah, 15 is solid little cash, to be honest. I did not write 15 minute on here, but I do use the 15. I made these slides a little bit ago, so do add the 15 to that. But you have the 8 exponential moving average, and you have the next moving average. I'm just going to do this so we can kind of cover it, the 21. So the 8, the 21, and the 200 are the 3 moving averages, except this is the simple. So let's just do 8 and 21, and we'll come back to the 200. So the 8 and 21 are the 2 moving averages that you want to have on your, I use it on all my time frames, but 1, 2, 5, and 15. 2 and 5 being, to me, the most, and then also the 15. But I'm definitely watching it on the 2 and the 5. And so if I, let's say, took, and we're just going to show you how this stuff lines up, and actually I'll do it on a multi-time frame. I'm going to bump another chart up here just for the sake of educational purposes. So let's drag this stuff over. So this is that's a 15-minute chart. Here's a 5-minute chart. So let's look at today. And I'm doing this trade because this is a trade I called out today. This is a trade I took today. This was a name I was looking at today. So that's why I want to talk about this. All right. So what do we have here? These two on the bottom, that's your 2 minute, that's your 5 minute. I could probably bump the 15 over there and I would see something there too. That's the 15. And you can see when I click it, it shows what everything is, like the time frames on all the different moves. So you actually here, we actually have if you look at the top chart, a 15-minute green bar that is taken out. So a red takes green, meaning a green candle. So you have a down move. You have a failure to break out. You have a leg down, which I think I said you need to know what a leg move is in the market on the description videos. You have what would be a Mark 15 or a 15-minute breakdown, a candle that closes higher on the 15-minute. On the 5-minute, you have a leg down, consolidation up into a know your limit 8 on the 5-minute. So we have a know your limit 8 on the 5-minute. And then you have on the 2-minute the same thing, an inside mark 2 or 2 minute, red takes green, taking place on the 2 minute. That's actually up here. I got this in the wrong place, don't I? Yes, I do. I got to bump this over. Give me a second. That actually takes place here at the 21. So spaces are wrong here. So that actually takes place at the 21. So the know your limit 21, 15-minute inside bar, and 5-minute 8 all took place at the same time. So when I'm looking for something, this is going a little bit more deeper than I kind of wanted to go in this, but you see how these strategies work. You see what I'm looking for in something. I'm sitting here scanning, looking at different names. I'm seeing where a name, like let's say Microsoft is on what happened. It failed to break through day highs. We have a leg down. I'm waiting to buy. Let's say I missed 2 of the moves earlier. Let's say I missed, I think I called this short here. This is a 2-minute time frame. If we go back to this chart and we're looking at the 2-minute time frame, I'm pretty sure I called this short here. I had taken one up here. I didn't want to talk about it because I didn't call it. I called it in a different room. I didn't call it in Discord, so I wasn't going to be like, I'm already in this. But I had taken one here and then sold some into the bottom and all that. But let's say that you miss it. Like, well, I don't know when to take it again. I don't want to chase. It's down here. It's chopping around. Are you just going to buy down here? No, you shouldn't anyway. According to the strategies that we're putting out here, what you need to do is you need to wait for consolidation. You need to wait for this to come up and trigger short. So we've had our leg down. We need to move up. And in future videos, we're going to talk about how long maybe you should wait, and we're going to talk about some other things that could be involved. But you say, hey, look, I'm going to wait for a 21 to test. And this is if I'm waiting for a trade to work, the number one trade I am looking, or the number one entry I'm looking for, is usually a 2-minute 21. It is 2-minute 21 or 200 are the most effective in my opinion. They work quite often. So you wait for it to come in, you know that this is a weak name, it comes up to the 21, and then you get your short. And that lined up with a 5-minute short too on the 8. So you have a 21 on one time frame and a 5-minute 8 on another time frame. That lined up perfectly and actually happened, you know, and there's some other stuff that's going on here. If you're reading a chart, you can be like, oh, it's also this, it's also this. Yes. When these strategies start converging and start looking the same, you can put them together for entries. And you can say, hey, I see that. Here's my entry short, 2-minute 21 short. Give the trade a little bit of room to the upside, and I'm going to ride this down. We'll talk about targets and other stuff like that in another video. Same thing I think happened in Tesla today, and I called this one out too. It was this one was just a scalp. I wasn't looking for a major move, and I think I posted what my targets were, but it was this 21 test. So let's say that Tesla had been going down. We have been talking about Tesla all day, and you never took it, and you're like, well, I don't know when to take it. What I said in Discord today was, hey, Tesla stopped right here at the 21 halt. Know your limit 21. This is the first test of the 2-minute 21 today. I think this is a pretty safe short. You could put a stop about 30 cents higher, and you've got a pretty easy short into at least day lows, and I would take half off down here at about 50% retracement of this up leg. And so how I traded this, you know, just to use the language that you'll hear in Discord and other places, to be like, hey, you know, I'm looking to do this. I'm looking to take 50% off here. I'm looking to do this. Well, the entry and the reason I'm taking it is the 2-minute 21 test. The know your limit 21 is the first time that it's tested the 21. Almost tested here. It didn't. So it tested it. So this isn't, could this have failed? Yes, this could have failed. It didn't. It could have failed. Instead, it worked. We chopped around for a little bit. You came in a day lows. You should have taken most of your profit off here. And then, you know, we come back up, we mess around a little bit. There's probably a larger time frame short that sets up. And, you know, if I was to go look at this 22, let's look at the other just to see if you were then looking to continue in Tesla short. That's a 5-minute. When did the breakdown happen in Tesla? Later in the day. Move this over. I wasn't here trading that, so this is why. So I'm just showing you that these work on different time frames. So if you're like, okay, Here we go right here. And that's an 8. All right. So this is a little bit more of an iffy trade for reasons, but let's just say this 5 minute 21. It's a know your limit on the 5, right? 5 minute time frame. Know your limit. You have a hit the 21, push up a little bit higher. You're also hitting the 15 minute 8, and there's nothing on the 2 on the 21 or on the 2 minute. But you're like, I'm waiting for it to hit that. If you take the next break, which happened here, this can be your entry short if you are a wide stop trader. So there are reasons not to take this. And so I'm going to talk a little bit in the next video, which I'll either do tomorrow or Wednesday, about reasons not to take a trade. There are reasons not to take this. I'm going to come back to this tomorrow. But if you are just like, you know what, I see a 5 minute 21 test and you're not looking at anything else, you're just looking at the 5 minute, and you say, hey, here's a 5 minute sell setup. I'm going to take the break of this candle, or somewhere, maybe the break of the body of the candle, and I'm going to put a stop above the entry candle, which is the strategy, right? So there's your 5 minute entry. So the top of this candle is 96. The bottom of this candle is 95. So this isn't a very big candle. So you have a dollar risk, a little bit less than a dollar risk, and you entered around 95.25, and you're willing to take a dollar risk on a Tesla trade, which could be 50 cents in your options, or you know what it would be. And you say, hey, as long as it doesn't go, I think this is a trigger, and I'm going to take this short for a move lower. That would be, if I was looking for a long move throughout the day, that's what I would look for. I would look for something like that, and that would be the buy. I would put my stop a little bit above that. And context matters, like we talked about earlier. I'm not telling you to go out, wait for the first 5 minute test. You need to back test this. You need to look. You need to look at it and be like, this makes sense, this doesn't. Why didn't this work? Why did this work? We're going to talk about reasons that that some of these strategies fail in another video, probably tomorrow or Wednesday. But that's the trigger. Remember, the purpose of this video is the triggers that get me in, what I am looking for to take the trade. This is not a comprehensive. This particular video is just that, just those really quick just looking at that. And to really quick, before I jump over to, let's look here. So Tesla breaking out. When you're like, oh, well, Tesla ran all day on Friday. I don't know when to get in. How would I get in? When am I going to buy? Well, this is a 2 minute time frame. So first 2 minute bar that closes lower is right here. If I was to draw an arrow, I'd be like, how do you turn the arrow in a different direction? I'd be like, right there, right? And then where's the break? Right here. Can't see it because of the screen, so you can see like, oh, look, that candle breaks it. And there you go. And then it goes up, and then it goes up the rest of the day. And you're like, oh, well, I missed that one. I didn't want to trade it, or I didn't want to take it. Well, when's the next time I could buy it? And you see how it doesn't move as quickly here? You say, okay, when's the next time I could take it? Oh, well, what about the Know Your Limit 8 in Tesla that happened right here? Tag the 8 on the 2 minute. And again, you could look at this on the 1 minute if you wanted to, but tagged it on the 1 minute. It did not break lower. It didn't break right away, so you would have had to hold through a little bit of chop, but then you go higher. You know, this is there's your little bit of a move higher. You come down lower. If you're still in this trade, which you probably would be, it didn't tag the 21 yet, but it's still pushing. Pushes higher, tags the 8 again, goes up. Here's your first 21 test. So if you missed all that move, so I actually didn't trade Tesla here. I didn't like it. I wanted it to break out. It was in a very tight range for other reasons. I wanted it to actually go a little bit higher and pull in. You say, hey, I'm just going to wait for Tesla to test the 21. I'll sit here till 12 o'clock, 11 o'clock. Here you go. There's your first 2 minute 21 test. There's your first break. It doesn't go right away. It was a very grindy up day, but it does end up going. You know, you set your targets, take profit where you need to take profit at. So if I was looking at Tesla and I'm like, man, I missed all this move, I'm not just going to jump in on any random kind of like, oh, it's going here. Okay, we're going to go all the way up. I'm going to wait. I'm going to be patient. It's going to come in and tag. It's going to break out. I'm going to have proper risk reward, so I'm not scared of it moving around. And I'm going to take that as it goes. And then I'm going to take profits on the way up. I'm looking for that every day. I'm waiting here till 10:30, 11 o'clock, waiting for patterns to develop. Once the patterns develop and I see something breaking out, breaking down, if you look at Meta, same day, look at Meta. This is the chart I wanted to come back to later. And again, 2-minute chart. The 1-minute chart's a little bit messier. You can kind of see the same thing. You have your 8 test here, runs higher. You have your 21 test here, runs higher, runs up a little bit, not as much. Again, I'm not as big of a fan of the 1 minute. It does work, but it never breaks lower. So if you're just like, hey, I'm a hard stop person, I'm going to put a stop below the 1-minute 21. I mean, yeah, you could do that. I mean, if you look at that and you're like, where's my bar? I'm going a little bit long here, but if you're like this, and you know what, that's my entry, my stop's going to be below there or a little bit below there, let's say here, and I'm willing to take that, it never goes down below, and you know, you can take that trade and then take profits as you go higher. If your trading plan calls for that, you need to make sure that you have a trading plan and you're not just blindly doing anything I'm talking about. There's your first 20, or there's your next 21 test, comes back, hits it again and runs. On the 2-minute time frame, you can actually see how this lined up. So we had the arrow over there. You can see how this goes too. 2-minute time frame, we break out in Meta. We pull back into the 8, you chop around for a little bit. This is when I use the 1 minute sometimes. If it's chopping around and an 8 doesn't get it to move, I'll wait for a 1-minute 21 to test. There's your first bounce off the 2-minute 21. Bounce does happen, chops around for a bit, goes higher. Usually, like I said in the on the slides, your general target, your first general target is day highs. Your target is not always way higher. And something like this, when you've set a high and you pull in a decent amount, your first target, or at least a target, you should be selling some into the top. At least that's what I do. I can't tell you what to do. You can do whatever you want to. Yeah. So that is, and I think this actually happened the previous day too. Something very similar to this. You flagged, you broke out, 2-minute time frame, pulled into the 8. Know your limit 8, right? Set the proper stop, set the proper target, all that. We're going to talk about that later. There's your 8 test, and you run higher. 21, we're a little bit extended. This time you would have got stopped out, right? This wasn't as good. You came down, you chop around a little bit, you probably get stopped out. So this is why context matters. I'm not going to sit here and say, every time it hits a 21, it's going to the moon. Context matters. You're going to lose. What am I looking for to enter? I'm showing you. Does it work every time? No. Nothing does. Context matters. Risk management matters. I'm not going in taking 100 or 500 contracts into something like this. This is what I am looking for on different time frames to find entries in trades. And if you're a new trader and you're not sure what to look for, this is a place to start. This is where I would start to understand overall what happens, to understand everything that's taking place in the market, to understand when could I possibly buy. I want a paper trade. When could I possibly get into this trade? When's the possible entry? This is one of the possible entries, these inside bar breakouts and these moving average tests. So you have the, let's jump back over to Discord, or I'm sorry, PowerPoint. The other one, so your know your limit 8, know your limit 21, know your limit 200. The only difference, I actually said EMA here. This is not EMA. This is SMA. Simple moving average. I just copy and pasted some of these things from the wording there, but it's kind of the same thing. The 2-minute, 1 minute, 2 minute, 5 minute, and honestly 15-minute too. Very important, and they work. You need to know where they're at, and you need to wait for them to hit. They don't always hit. This is the more rare one, but when they do hit, they are very often, when they're not. So this is where context matters. Like, oh, anytime a 200 hits, it matters. You know, this is a 5-minute. Let's go to a 2-minute. It's actually working a lot here. So like in here, when you're just chopping around, you're in, I'm not even showing you anything. When we're just in this zone and we have no pattern, no breakout, breakdown that's like important, and you're just in a supply zone or a demand zone, I don't really, like, I'm not sitting here shorting every time it hits the 200, but you need to be aware of where it's at, because a lot of times when you start trending, see how we're trending here now in Meta, we're looking at Meta, this 2-minute 200 becomes a buy point. And go back and test your charts, look at your 200s, and look for those buy setups. Same idea, when it hits, if it hits and stops on it, like we opened up here in Meta, and you're just going to rip off of it. You know, you came down in Meta here, you kind of started going up. This is something else, but the 2-minute 200 is the same thing. I don't have a lot of time to go into it, but the idea is the same. 5-minute, 2-minute, 1-minute, 15-minute. Have them on your charts. Know where they're at. They're important. They're buy points. Generally, their targets are a little bit different. On the PowerPoint, I said take profits as you get green. Targets are different based on bigger time frame, where you're at in the price action. It's not just, usually this one just isn't a day high. This one usually is sometimes just back to the 21. It could be just to another level based on a bigger idea of the price action. But definitely know where your 200s are at. A lot of times the stocks will stop moving here. Your other one is VWAP. Everybody should kind of know this as you get into it. I put it on here. I do not generally take trades off of VWAP. However, we do have some really amazing traders that do. And so same thing for the VWAP. This is the last one we're going to go over today. If you're looking at something, and again, I didn't do this today. I don't generally do this, but I have it on my chart because it's a very important level to have. A lot of people use it, but you can see how that level kind of matters. And when you do tag it, a lot of times you'll bounce and you'll chop around off of it. If you say, hey, does VWAP work? Here's a 2-minute chart of the VWAP. So you hit the 200 in VWAP, you hit the 200 in VWAP, both times you bounced. So it actually went through the 2-minute 200 and tagged VWAP and bounced. So it does work. You can use it. I do use it sometimes, especially if you're going to tag it twice and you're like, hey, we're right there. If you look at Tesla this morning, where was it? Right here. If you're ledging under it, so I was actually about to go long here for a reversal, and I did, and I got stopped out really quick and I went short. But you're failing to get above VWAP, failing to get above VWAP, short. Stuff like that can happen in context. I do use the VWAP. I am always paying attention to it on my different time frames. So it is another strategy you can use that you can put in your tool belt. So to me, these are the simplest of the simple when it comes to what I'm looking for. And again, it's been a minute since I've been broadcasting, so I'm rambling a little bit. I am sorry for that. I've gone a little bit longer than I want to. This is just the first part of it. This is just what I'm looking for. You're a brand new trader. All you see is a bunch of lines everywhere. You don't know what to do. Add these moving averages. Wait until you see something that, again, go look up what a leg is, move in the market, and learn to identify it. And then you're like, okay, well, something like, Tesla is just running all day. I don't know when to get in. When can I buy it? Or, NVIDIA the other day. When was this? When's Friday? 31st? Friday, right? Something like this. You're like, I don't know when to get into it. It's on the 2-minute. It's kind of broken out. It's up here. Do I just want to chase? What do I want to do? All right, we broke out. We're pulling into the 2-minute 21. Is this a long? That can be an entry. As you start coming into these moving averages, that can be an entry. It broke out. You're like, okay, hey, it broke out. I don't know what to take. I missed the initial entry. I'm going to take a one and done. Here's a one and done that worked. Boom, there's your one and done. You're above resistance. You're clearly strong. You wedge down. You're breaking out. Here's your one and done. Boom. You're like, okay, when's the next one? There's your 8. There you go. Now remember, this isn't it. Only the first time it tests. So we broke out. One and done worked the first time. The 8 worked the first time. No. Second time. No. We don't do that. Down into the 21. 21 broke out. Pushed into where? Near day highs. Sell. Is this a strategy? No. This is the second, third time, whatever it is. Like after we broke out, we need more consolidation. You need to go from the 2-minute to the 5-minute. You need to go to a larger time frame. Once a strategy hits on a time frame and works, it is no longer valid on that time frame. It might work the next time, but it's not valid unless you're just exploding through levels and you're breaking out. What you're looking for then is the same strategy on the next time frame. So 1-minute, 2-minute, 5-minute, 15-minute. I gradually go up. So I'm looking for it to take place on the 1-minute. I'm looking for it to take place on the 2-minute. I'm looking for it to take place on the 5-minute, 15-minute. I'm not sitting there looking for every time it hits the 8, every time it hits the 21. Most times, context matters. That's most days. That's the majority. So, so that would, be how you play that, how you could play that anyway. And then sometimes it just doesn't, you can't just buy just because it hit it. You know, I didn't do this today. This is today, right? I didn't trade NVIDIA today. We thought the market was going shorter. So context matters. You don't just buy every time we hit. I'm going to show you this not working. You know, we do break out here in NVIDIA. It's strong. It, you know, hits the 200. It goes higher. You know, we're breaking out. We come up. We test the 8. We don't get any bounce. You barely get any bounce. You could maybe say this was, if this was a strategy, it would be a bad one. In context, you shouldn't take this. But of what we were talking about today, what our plan was for the day was waiting for the market to pop and then short it. So if anything, this is the same as Microsoft. You're looking for a short here. But if you're just thinking long, and you don't get the context of the market and you don't have a good plan and you're just coming in like, okay, I'm just going to long this right here. It hit the 21. I mean, granted, you never broke out, but if you're just somebody that's just like, I'm just going to get it when it hits it, obviously that's not going to work. Same thing here. Here's the 200. If you're like, hey, I'm just going to take it and you don't have the proper context, it's not going to work. It just breaks the 200 and goes down because that's the part of the price action that we were in at this point in time of the day, which was this morning. We were talking about going short. That's what we wanted to do. So just to show you, context matters. Don't just go look at a 21 and be like, every time it does something, I'm gonna go. I'm gonna short it. But when you're in a breakout, when you have moved out of the consolidation, whatever you want to call it, supply zone, demand zone, when you have a falling wedge that broke out, when you're failing a resistance level or support level, when you're catching a bounce, the entries I'm looking for, the simplest ones, I should say, that I wanted to introduce to you guys first for you to get a handle on are the ones we talked about here, which take place pretty much every single day. You can use them using common or options. Common's easier. I trade with options. You can do both of them. So that is, I think I do want to cut this. I've gone a little bit long. I should have done this in 2 videos, but hey, that's okay. I will do one of them. So tomorrow or possibly the next day, Wednesday, I will do another one, and I'm going to continue to push these out, and we'll talk a little bit about maybe when they don't work. We'll talk about identifying the breakouts, the breakdowns. We'll talk about a little bit more. We're going to put this a little bit more in context, but recognize these patterns, recognize them happening every day, and if you're trying to learn to trade, learn to see these happen. Learn to see that's an M1, or that's inside bar breakout, that's a Mark 1, that's a know your limit. You want to call it something else, call it something else. I don't care. Learn to see when they're happening. And then the next part is learning the risk management and the entries. And yes, the reversals, what Little Cash is talking about is when to stop out versus reverse in a trade. So I actually think that's a really good one to do. A little bit more advanced, so that might be like video 10 or something like that. But again, in this intro to trading series, the idea is let's learn the simple concepts and then let's build from there. So we're just putting in the foundation. The last few videos, you saw my trading setup. If you're going through this playlist, you saw my trading setup. You saw my chart setup. You saw some vocabulary you should learn. And now we're getting into a little bit of the meat and bones of it of, okay, when is he buying? Okay, cool, this stuff's happening. But now we have to learn context. Now we have to learn signal bars, reverses, some different things to make all this work for us. But just the buy points, which is what we've gone over here, is what I'm looking for when I get the context of a move, when something is going in the direction I want, when I have a plan. I am not just jumping in random like, okay, this sounds good. I'm waiting for one of the things that you guys just saw in those slides to take place. When that takes place, then I decide risk management. Am I taking the trade? Where does my stop? And all that kind of stuff goes into play, and you start taking your trades. So I do hope this video was educational, was helpful for you guys. Ran a little bit longer, sorry for that. In post, maybe I'll just cut it in half and I can do 2 of them, make it 25-25 if I can do that. I don't think I can because it was live, but I do hope that was helpful, especially for the people that are learning to trade. If you're watching this, and also if you are watching this, give me a little bit of grace. I haven't done broadcasting in like 6 months, so I'm just getting back into it. I'm a little bit slow on the draw, but we're here. We're going to keep pushing through, and we're going to continue to learn, continue to grow, continue to get better. So I will see you guys if you're in Discord tomorrow. If not, I will see you on the next video in part 3 of the Intro to Trading series. Thank you all very much and have a fantastic evening.